Heroic efforts to manage fires in the Northwest Territories and British Columbia have made a huge difference to residents and the economy.
The firefighting efforts have been, I guess, successful, and we've seen kind of muted numbers of the costs of these in terms of infrastructure and loss of property.
No doubt about it, there is devastation, but analysts say it could have been much worse. Though this year's wildfire season was about 6 times as intense as normal, national supply chains have remained intact. Oil production was shut down this spring, but only temporarily. The biggest effects will be felt on tourism.
People have probably changed their plans in terms of coming to Canada, and hopefully it won't have too much of an impact longer term once this fire season is over.
But households across the country will feel the bite of higher insurance costs related to this wildfire season, as well as other recent extreme weather-related disasters like flooding.
And that means that insurance premiums are going up. We've probably anywhere from 5 to 15%.
China's real estate bubble has come home to roost, many economists say, and that may spill over to their banks.
They're probably going to need to rescue some of their financial system.
China's debt to GDP ratio has hit a record 280%. Household debt stands at nearly $5.4 trillion US dollars. And youth unemployment is at a record high. More than 1 in 5 people between the ages of 16 and 24 were jobless in June. Now, we don't have more recent statistics because the Chinese government stopped sharing that data.
China's central bank unleashed a surprise rate cut last week. But there is a silver lining. The slowing of the world's second largest economy may do some of the heavy lifting for the Bank of Canada.
Weaker Chinese demand actually helps slow the Canadian economy. It might be a little bit of a side benefit that we won't need interest rates as high for as long to get inflation down here at home.
Anne Gaviola, Global News, Toronto.